Hi, welcome to the Market Alert for Friday, the 22nd of April 2022. So what a day yesterday. More on that in just a moment. Yesterday's headlines after Powell spoke, stock and bonds bloodbath as Fed drops hawkish hammer. Tina is dead and the Fed killed it. So we're talking about QE there. Let's have a look at this in more detail because I thought this was interesting inside of the article. The market is now fully pricing in a 50 basis points in both May and June. The meeting that is to be held obviously next month and the month after. And pricing in a 75% chance of a hike of another 50 basis points in July too, and a 50% chance of 50 basis points in September. Now, if they go ahead with this, then that's really going to give the market some cause for concern, especially tightening into a recession. Certainly going to be interesting. So this is what was behind this headline yesterday and why the market went from trading up very nicely in the morning with no short trade ever going to be successful to then being short for the whole of the afternoon and evening. So yeah, very interesting. Stockman exposes David Stockman. I like David. Talks sense, has for years. He worked under the Reagan administration. Stockman exposes the inflationary hell that's about to break loose. Absolutely. Things are bad now, but you haven't seen nothing yet. We have never seen a perfect storm quite like this. But of course, some of the factors that will be driving up food prices are entirely self-inflicted. Yeah. Anyway, news for today. It's we've got the retail sales for the UK, and then we're on to the flash news. It's a pain in the rear, isn't it, for intraday traders? 8:15, 8:30, 9:30, and then obviously 2 p.m. there we've got Lagarde, and then the US flash numbers, and then Bailey's also speaking again. Now, he didn't raise rates yesterday when he spoke, which I was surprised. I thought there might have been a spontaneous announcement on this, but we didn't get it. So again, they're way behind the curve, particularly Europe. I mean, blimey, I saw a headline yesterday where they were talking about not raising rates till the end of the year from 0%. Well, when inflation's running at 20% on food prices and in the rest of other sectors as well, goodness knows what's going to happen in Europe. I mean, it could be the death knell for it. Incredible that they're just so behind it. On a different note, gold silver ratio, you can see that we headed back to that 80. I did warn yesterday that they would head back towards there. Massive move to the upside yesterday, massive move to the downside in silver. Again, I talked about this yesterday. They're heading for $24 an ounce. And you can see here, massive open interest yesterday. 500 million ounces of silver traded yesterday. You'll see there, 101,000 contracts to slam the silver price. And just to show you this, there we had 101,000 contracts. Each contract is paper contract of 5,000 ounces of silver, giving a total of just over 500 million. The annual amount of silver that is brought out of the ground is 1 billion ounces, and they traded half of this yesterday and have been doing, as you see this, for some time now, just to keep the price under pressure. Is it going to work? Who knows? But down to $24 yesterday. We'll look at that in just a moment. But first, back to the stock market. Yesterday, the Dow trading up to the resistance that we looked at yesterday. It did get through at one point and was looking good to head to the upside until Powell came out and spoke. This spooked the market, or well, didn't spook the market, did it? That's the journal expression that is used. It didn't spook it. They'd run the market up in the morning, and then they were able to sell into it. So they got a good idea what Powell was going to say. So they could then, having run the market up, if you look at it in the 30-minute chart, you can see their prices having been run up several hundred points, gave them something to sell into when they wanted to get out of the market. Market trading to the low of yesterday on the overnight and is coming back now. So expect a recovery during today, so long as we've got some decent flash news coming in this morning. So there's the upside targets for the Dow heading back to the low. No surprise there. We were certainly oversold, and then we've got a bit of momentum there as well, divergence, which you can see, and the market trying to move back to the upside. The 200 MA and the 30-minute down needs to be taken out along with the 50, which is at the DP level there as well. So the DAX showing a similar picture. Even more interesting actually in this one yesterday, the market trading up to the 14,600 level, which it did. It went through the 62, it went through the 78, it went through the 89 with ease. Nobody was selling into it. The selling took place in the afternoon, so let's just have a look at the 30-minute. You can see in the morning session the market moved strongly to the upside. As I said in yesterday morning's market alert, they would come back and retest the high of the previous day, which they did. The market came back, sat on the high, and then moved higher. And in the cash session, the market moved a total of 236 points from the low to high during this period in yesterday's morning's trade. There was no red bars in the 30-minute chart, which you can see here. And we were oversold by the afternoon. We had divergence, we had supply, and we had the second crossover, and then we had the retracement, and then the market went short in the afternoon with the Dow, and it was a great trade to the downside for yesterday. Really enjoyable trade on the downside. It was amazing. The tone just changed completely as soon as Powell was going to speak. But in the morning, there was just no short trades. Even in the 5-minute chart, when you look at this, it was very difficult to get short. Here we had the market in the futures yesterday. As I said, they would come back and retest the high. They did. The market sat on the high. And then in the cash market, you see huge volumes coming in as they took the market down to the previous day's close and the 200 MA with divergence. Then the buying came in and off it went. It just one-way ticket as they brought the market up. We became oversold. The market showed red bars, pull back slightly. Each one of these lines is 12.5 points, so 25 points, about 37 points, 40 points back. We then became oversold, and the market was then free to go on and make a new high up to the R2. When we got to the R2, we were overbought. Again, we had a small pullback here of 25 points back to the 200 MA, and until we were oversold, even though the market traded sideways there, became oversold, and then we went up again until we became overbought. And then the market drifted down, retraced, as you can see there, waiting for the Dow to open. So you've got the retracements through here. You've got one to there, down to there, and then one back to there, down to there, and then back to there. And we'd already become overbought at this area here. Crossover, market pulls back. Then we go back to 89%. You see that's 89%. And then we start to switch again. And then the rest is to the downside, which you can see there, and it continued all the way through into the evening because of those potential rate increases that Powell spoke of during his meeting yesterday. In the currencies, the yen still, or rather the GBP, JPY is still on the highs there, looking a bit weakish, due for a correction because we're way overbought at the moment in this market with some divergence. Yesterday saw the market sideways initially and then waiting for Powell. Then the market moved higher and then it came back to where it started from. Overnight the prices have retraced, and you can see there that we've got the crossover, we've turned red, and now we're oversold at yesterday's low and the S1, which you'd expect the market to stop at, along with the 200 MA there as well. In the pound, market remains sideways. Yesterday moving higher initially, but nothing from Bailey. And again, you can see tied in with the US coming back up to the high of the previous day and then moving to the downside, and has been sideways. Again, notice how important the low is in all of these markets. You can see how the market was brought back here with divergence, demand as well, and the crossovers, and now heading back to the upside there as well. And finally, the sleight of hand and the manipulation of the banksters with the silver market continues. Yesterday, as we saw in the intro this morning, the market slammed using 500 million ounces of paper silver back to the 78.89 area. They haven't finished yet. For me, they're still going down to the... I'll just draw this in for you. They're going to retest this low, which is going to be $24 an ounce. Watch out at 1 p.m. unless the dollar comes off, the dollar index comes off. Otherwise, we go down and retest $24 per ounce. Been right all week on this, that they wanted to crush the price, and they've done it very, very successfully using the futures market in order to do this, as we've seen here. Massive volume yesterday. 500 million ounces in order to pull this off. The good news is, I suppose, is that it's taken a lot more volume to try and move the price lower. As Stockman says about the inflation, what's coming, it'll have its day. But what you've got to keep in mind is it's inversely related to the dollar index. And until we get up to 103 on the dollar index, where the market's blown out before, then silver is going to be under massive pressure. I know they can move together, but as a rule, they are inversely related, and yesterday's move back with the threat of the Fed raising rates several times is bullish for the currency, so you can understand why. But overnight there's a bit of weakness there, which is why the silver market is now finding a bit of support at yesterday's low, but it's not going to hold. It's not going to hold at this level. Whether it's today or not, they're going to bring it down to $24, if not below, because of what we're seeing here. We've got quite a bit to go on the upside to get to that 103, which, with the increase in interest rates coming, if they are carried through, then you will see that happen, and that will keep the pressure on the silver market. Meanwhile, in gold, no big deal yesterday because of the war and inflation. That's seen as the primary hedge against inflation. The market holding nicely, which was why you had this massive difference. And you can see this massive move yesterday in the gold-silver ratio. Can I see the high, low and close on this? There it is at the top, isn't it? So we went from a low of 79.17 to 79.65. Actually, that's today's. That's more like it. There we go. The low of 77 to 79. So you can see how big the move was there yesterday. And it's still going higher. We're going to come back up to these levels here across there. That's where we're coming back up to, that 81 level with this. So there we go. It'll be interesting to see what they do, but you can see already overnight they've taken advantage of trying to crush the price. And there we go. Just get the right tool down to the low of yesterday, and already coming back below the 2450 level there. So definitely, and then we've got all of the flash news as well. And if that's not inflationary, then silver will be heading south. Just the way it is. We can't stop them from manipulating the price, despite every other metal in the world above its 1980 high. Nickel, $100,000 a ton a few weeks ago. It's back down to 37. But zinc, the same. Palladium, platinum, every other one you can think of, but not silver, because of the position that JP Morgan, Bank of America hold of 1.2 billion ounces. They can't let it go up because they're short. And short with thousands of contracts in order to hold that position as well. All will be revealed one day, and also it will be released from the clutches. But until they're ready to do that, and as Bix Weir says, that silver is always the last metal allowed to be run to the upside during inflationary time. So we just have to put up with this silliness and nonsense that we've seen for many, many years. But despite that, it's also, I'm eternally grateful because I've been able to buy a lot of metal at low prices. So we could be seeing this at $650 an ounce and having missed it. So there's always a silver lining, no pun intended, and the opportunity to actually buy it when it's cheap as well. And when you can actually get this sort of thing with 80 ounces of silver to 1 ounce of gold, and that's nothing to where it was a couple of years ago. which you will see here that the market was up at, let me just do this, the high there, we got to 120 ounces of silver to gold, and it was a no-brainer. That was during the onset of the pandemic, and I just, instead of watching the news, I was buying silver. 120 silver ounces to 1 ounce of gold was just a bargain, and you can see the net effect there. Once things got sorted, the market came down, and now we're back to the 80, where the market had traded mainly for some time, until we had that run up when we had a problem with the repos on the 17th of September 2019, and then they had to print billions overnight to keep the financial system going. Anyway, that's enough for this one. We're at the weekend. Have a great one, and as ever, thanks for watching. See you in the next one.